Good morning, everyone. Today we're exploring a topic that's at the heart of our modern world: how countries connect, collaborate, and grow together. Today we're talking about something that connects us all: trade. Trade is more than just the exchange of goods. It's the lifeblood of the global economy, linking people and businesses across continents. The coffee you drink in the morning, the phone in your hand, the car you drive to work. Parts, or all of them, likely come from another country. Every day, millions of products cross borders, making our lives more convenient and connected. Countries trade for the same reason neighbors do: to get what they need and focus on what they do best. By specializing, nations can produce efficiently and share their strengths with others. This simple idea drives the complex world of international trade, creating a global web of connections that supports jobs, innovation, and economic growth. Trade lets countries access goods and services they can't produce efficiently themselves. It brings variety to our stores and helps keep prices competitive for consumers everywhere. Agreements, or trade deals, set the rules, making trade fair and predictable. These deals help prevent disputes and ensure everyone plays by the same guidelines. Strong trade relationships often lead to stronger diplomatic ties, building bridges for goods, ideas, and cooperation. These connections can foster peace and mutual understanding. Right now, the United States and Vietnam are negotiating a trade deal that could reshape their economic future, opening new opportunities for both nations. We'll break down what's happening, why it matters, and what it could mean for families and businesses in both countries. These changes could impact everything from the products on our shelves to the jobs in our communities. Let's dive into how global economics shapes our daily lives and discover the real impact of international trade on the world around us. The US and Vietnam have transformed from wartime adversaries to economic partners. After decades of no ties post-war, relations normalized in 1995, opening a new era. Since then, trade has exploded, making Vietnam a key US partner in Southeast Asia. American stores now carry Vietnamese furniture, clothing, seafood, and electronics. Meanwhile, Vietnam imports US agricultural products and advanced machinery. This two-way trade has created jobs and strengthened ties on both sides. Beyond goods, the partnership is strategic. US companies see Vietnam as a reliable manufacturing hub. Diversifying supply chains with Vietnam reduces US reliance on any single country. Today, the relationship is dynamic and modern, supporting jobs and innovation. The current negotiations aim to build on this progress and deepen cooperation. The trade flowing between them is proof of how much things have changed. Now, both countries are ready to write the next chapter in their remarkable story. Right now, top officials from Vietnam and the US are in Washington, D.C., negotiating a new trade agreement. These talks are intense, aiming to shape economic ties for years to come. After reaching an agreement in principle last October, they're now working through the details: which products are included, what rules apply, and how disputes will be resolved. A key issue is rebalancing trade. America buys far more from Vietnam than it sells. The US wants more access for its products. Vietnam wants better entry for its exports. Both sides hope to finalize the deal by the end of December, adding urgency to the talks. Every detail matters, as the outcome will affect billions in trade and countless jobs. These negotiations are a critical step toward a stronger partnership. The results will set the rules for future business across the Pacific. To understand these high-stakes talks between the US and Vietnam, let's break down two key terms that are at the center of the negotiations: tariffs and trade deficits. These concepts shape not only the discussions at the table, but also the daily lives of workers, businesses, and consumers in both countries. A tariff is essentially a tax placed on goods that are brought into a country from abroad. When a government imposes tariffs, it makes imported products more expensive for consumers, which can help protect local industries from foreign competition. Tariffs can also be used as a tool in trade negotiations, giving countries leverage to push for better deals. In 2025, the US imposed tariffs on a wide range of Vietnamese goods, from electronics to textiles. Now, negotiators from both sides are meeting to decide which tariffs should remain in place and which might be lifted, hoping to find common ground that benefits both economies. For Vietnam, securing exemptions from these tariffs is absolutely crucial. Lower tariffs mean their products can be sold at more competitive prices in the US market. helping Vietnamese businesses grow and supporting jobs at home. Now let's talk about the trade deficit. A trade deficit occurs when a country buys more goods and services from abroad than it sells to other countries. In other words, imports exceed exports, and money flows out of the country. In 2025, the U.S. trade deficit with Vietnam reached over $111 billion, making it the third largest U.S. trade gap after China and Mexico. This number reflects the imbalance in goods flowing between the two nations. Reducing this deficit is a top priority for U.S. policymakers, who see it as a sign that American industries may be losing ground to overseas competitors. A persistent trade deficit can have real consequences. It can mean lost jobs in manufacturing and other sectors, as companies move production overseas to take advantage of lower costs. That's why the U.S. is eager to boost its exports, sending more American-made cars, farm products, and advanced technology to Vietnam. Increasing exports helps support jobs and strengthens the economy at home. The ultimate goal isn't to eliminate the trade deficit entirely, but to create a more balanced and fair trading relationship that works for both sides. Achieving this balance is at the very heart of the current deal being negotiated. It requires compromise, creativity, and a willingness to see the bigger picture. Both sides are aiming for a win-win outcome, where each country's businesses and workers can benefit from increased trade and cooperation. The stakes are high for workers, families, and businesses in both countries, making these negotiations more than just numbers. They're about real people and their futures. Both sides have clear and ambitious goals in these negotiations, reflecting not just economic interests, but also broader strategic priorities. The U.S. wants a more balanced trade relationship by opening Vietnam's market to American goods and services. This means making it easier for American companies to sell everything from technology to consumer products in Vietnam, and ensuring fair competition for U.S. businesses. Key industries, like agriculture, autos, and technology, are looking for better access to Vietnam's growing middle class, which is rapidly expanding and eager for new products and services. Preferential terms would boost U.S. exports, support jobs at home, and help American workers and farmers compete in the global marketplace. On the other side, Vietnam's main goal is stable, predictable access to the massive U.S. market, which is crucial for its export-driven economy and long-term growth. Removing tariffs on Vietnamese exports would fuel growth, create jobs, and help Vietnamese businesses expand internationally, especially in sectors like textiles, footwear, and electronics. Vietnam also wants the U.S. to recognize it as a market economy, a status that would make it harder for future tariffs to be imposed and would signal international confidence in Vietnam's economic reforms. Another top priority is lifting restrictions on high-tech exports, like semiconductors and advanced electronics, which are essential for Vietnam's modernization. Access to advanced technology is vital for Vietnam's ambitions to move up the value chain, create higher-paying jobs, and become a regional tech leader. Ultimately, both countries want to secure their economic futures and build a partnership that can withstand global challenges. The deal is about more than numbers. It's about opportunity, innovation, and shared prosperity for both nations. Each side is pushing for terms that will benefit their people, strengthen their economies, and foster long-term cooperation. The outcome of these talks will shape their partnership for years to come, influencing not just trade, but the future of their relationship in a rapidly changing world. Trade deals come down to real products that impact daily life. For Vietnam, coffee is key. Exempting it from tariffs could boost sales and support millions of farmers. For the U.S., cars are a major focus. Lowering Vietnam's tariffs could open a booming market for American automakers. U.S. agricultural products like beef, pork, and dairy are also on the table, aiming for better access to Vietnam's 100 million consumers. Vietnam wants to keep exporting furniture, footwear, and electronics to the U.S. without high tariffs. These industries employ millions in Vietnam and are vital for economic stability. The deal highlights how the two economies complement each other. The U.S. excels in high-value manufacturing and agriculture. Vietnam is a powerhouse in consumer goods. The goal make trade smoother and more beneficial for both sides. Specialization and exchange mean more choices and better value for everyone. That's the real impact of international trade. Beyond everyday goods, rare earth minerals are a strategic focus in these talks. Rare earths are essential for smartphones, electric vehicles, wind turbines, and defense systems. China dominates the global supply, creating a vulnerability for the US. Vietnam, however, has some of the world's largest untapped reserves. The US can provide investment and technology. Vietnam has the minerals America needs. This partnership could build a secure supply chain for critical materials. For Vietnam, it's a chance to attract investment and move up the tech ladder. For the US, it's about national security and economic competitiveness. Working together on rare earths deepens the partnership and addresses shared vulnerabilities. It's a forward-looking part of the deal with big implications for technology and security. In diplomacy, symbols matter. A high-level meeting between the leaders of the US and Vietnam to sign the deal would send a powerful message. It would show the world how far the relationship has come, from conflict to partnership. Such a summit elevates the agreement, showing top-level commitment to deeper ties. It's not just about trade. Leaders could discuss security, climate, and human rights. For Vietnam, it's a diplomatic milestone. For the US, it's proof of successful strategy in the Indo-Pacific. A presidential signing would capture public attention and highlight new opportunities. It would mark this deal as a true milestone in a remarkable partnership. What does this deal mean for ordinary people? For Americans, it could mean more choices and lower prices on everyday goods. For US workers and businesses, it's about new opportunities, more exports, more jobs, and a stronger economy. For Vietnam, continued access to the US market means job security for millions and a chance to move into high-tech industries. US investment in technology and rare earths could create a new generation of skilled jobs in Vietnam. The deal is about building a modern, resilient economy for both countries. It's a perfect example of global connection. Trade isn't just numbers, it's about people. A successful agreement turns a history of conflict into a future of partnership. It strengthens the bridge between two nations, and ultimately, it benefits us all, wherever we live.